All right. Well, that was fun. Good morning, everybody. Final pieces here and get the Zoom up and running. Hopefully you had a good holiday weekend. So the next big thing that is on the table is non-farm payrolls. That'll be this Friday. We also have FOMC on the horizon, and we have triple witch options expiration on the table as well. We'll be changing contracts in the futures. So we're looking at December 18th for the next meeting with a 25 basis point rate cut still on the table. Now that can change, right? That's the nature of the beast, especially with non-farm payrolls still looming. But it's not expected to change. The plan is to see the next cut. So there was some issue with France over the weekend. Markets, I mean, they didn't really drop that bad, but they're already trying to buoy back up. Looks like they're going to have it all settled. We'll see. It can go wrong still, but it is worth kind of keeping an ear out on what's going on with France. I know if you turn on Bloomberg this morning, all they're talking about is the pardon that the president gave. You know, that's one of the thing about those news sites like that. They're just going to latch onto a story, and every damn thing they talk about has to do with that story. And it doesn't matter if there's actually anything else going on out there. So maybe hop around to a couple of different sites. I like Finance Juice. It's probably going to be your best bet. And that way you can use the filter that's on that site and eliminate things like MSNBC, CBS, CNN, Fox News, that sort of trash. Just get it out of the way. So at 9:45, PMI manufacturing, 10 o'clock ISM with construction spending. We have a couple Fed speakers and we have auctions today. Now it shows a highest impact at 10 o'clock with ISM manufacturing, but those auctions in the front end, they're always worth keeping an eye on. It's like I say all the time, watch the clock. It's free. Everybody's got one. The government is very lazy. It's going to put out these reports on the hour, on the half hour, very rarely on the quarter hour. And no matter how many websites you go to, you won't have all of the economic events. I promise you won't get them all. There are just too many. And you may think, oh, well, yeah, but it's probably all the smaller ones. And who cares, anyways? No, even some really big ones like the QRA happens 4 times a year. And it's one of the biggest events that you could ever come across in the trading marketplace. Most of you are probably saying, what the hell is that? I haven't even heard of it. Exactly. And you won't find it on the websites. Right. So watch the clock. Even if you don't know what event is on the table every single day, you know we're coming into a new half hour. We're coming into a new hour. Here's the reaction from the discussion about with France. So as I said, just kind of keep an eye on that. If you had no idea what was even going on, check your news source. You probably need a new one. All right, so we had a 1, 2, 3 breakout, rejection, and pullback to the 786. I'm just kind of wrapping everything together. Take it from Wednesday high to Wednesday low and run it forward. And you'll see that we've been sitting inside of Wednesday's range. It's not much of a surprise. Then we had the breakout, got us right up into the 1, 2, 3, 6, and we've pulled back since then into the 786. So that gives us some idea of why we're here or where we're at in the structure. Then bring it all up into the front end, right? So we're just gonna take that one off for a moment. This is only Globex. It's Globex, but I am not using that wick on the 15-minute. That was lining up really nice with this pause on the half, right? So we've been kind of holding above VWAP. We finally started to expand. We're back to the Globex open. Probably going to find some liquidity there, have some issues. We can see when we did pop up into this zone, it was rejected. Now it's above 60.50, big round options level. You got to kind of expect there's going to be some traders up there, some liquidity, and we're going to have a hard time getting through it. But if we do get through it, we're not done yet. We still have to get through this level back here. All right. The thing about this level back here is that was the 1, 2, 3, 6, and this is a pullback into the 786, which lines us up since the 786 held for a run back up to 100, a breakout, and then a new run to the next level, to the next 1, 2, 3, 6. That gives us our ADRs for the day at the bare minimum. I didn't measure it, but we can assume that that's the target. Just put these back for a moment so we can see where the 1, 2, 3, 6 is at. Yeah, lines us up right there. All right, so that'll be the new 1. There's the new 111, the new 1, 2, 3, 6. And then the ADR half. The ADR half is 1.06 right now. Over the last 21 days, the ES has made an average move from high to low of 1.16. If you look at the 1-day daily expected move or the daily 1SD, they're coming up a little short. So we are consistently expanding beyond the statistical mean, right? If you were running like a Z score, we'd probably be sitting at, I don't know, 1 something, right? Anything above a 0. All right, so today's floor pivot, the daily pivot sitting up here. Obviously, we don't have an MDP. We got a wide channel, which opened above the previous day's channel, completely outside of it. They're not touching. That's bullish. Price opened above the pivot. That's also bullish. And so far this week, we're opening above the weekly pivot, and that's considered bullish. It's not much of a surprise. I mean, when we zoom out a little bit and just look at it, it's been a consistent run up to this level, and then we've been chopping here, holding the highs. We'll take a look at the volume profile of last week, but with that short week, it's not very It's not something I would put a lot of weight into. 60-17 or 60-16, something like that as the point of control for last week. We are outside the value area high. We can see how we ran into some liquidity at that 60-50 range. We didn't spend very much time there. It'd be interesting to see on the TPO versus the volume profile what that elevated structure, that 60-53 looked like. But we got into it, took the rejection. This is interesting. It'd be worth looking at it in a little bit of detail. Still, if we break down through the value area high, retest that point of control, if it doesn't hold, I don't think that value area low is going to do anything for us. And it's likely that we'll get back into that 59.20 area. I think that shallow zone here, price tends to move through those shallow zones really fast. We can see how price moved up through it, moved back down through it. $10-day, 30-minute volume profile. The point of control did move down like we were talking about last week, right? We had talked about it shifting from up here, down here. So that puts it quite a bit a ways away from us. And it's not expected to change unless we revisit that 60-20 area. Then it's possible that they come in and play save a hoe and we bring the point of control back up. The idea would be this area right here has a chance to continue to expand outward. And since we're going to lose these candles as we gain new candles on the right, we could see that point of control shift up within a day, right? Maybe two. I think it might be a little later in today, maybe later in the week if we don't drop down here at all. If we drop down there, could get it a lot faster. 60-11 is a cog line. That's right up in that zone. 5-day, 5-minute point of control and TPO. Sort of see that exit liquidity. You know, it's interesting that on Friday, I did mention how it seems like every year around that time, we talk about, oh, it's sideways. We don't really have any reason to go anywhere. Wouldn't be a surprise if we just grind up into it and then sell it off next week. So it wasn't much of a surprise when we broke out on Friday or that we sold back into it Sunday night. Go listen to the morning briefing. That was kind of the plan from Friday. So at this point, we do have a VPOC overhead. It's an untouched point of control from last week. If you're willing to take a little bit of license with how we opened, right? So we opened at 6 o'clock. We spiked up into it, into like a wick, and then fell back out again. So on the one hand, you could say, nope, that's been touched. We're done with it. On the other hand, we didn't close through it on the other side. And an argument could be made that it's still a VPOC. As far as I'm concerned, it's been hit, but that doesn't mean I think we're done with it. So for me today, I'm just going to keep it as a POC. It's not a VPOC at this point. Change the color, the lines, so that we recognize, hey, this is not the same thing that we normally run. The textbooks will tell you to do it anyways. If you've gone through anything with the volume profiles, TPOs, the textbooks mention carrying forward the point of control, whether it's been hit or not. Same with the value area high and the value area low. I've already got enough pivots. I don't need more, but I think that one still has value to it because we're trying to look past just the very robotic nature of trading and say, well, this is the rule. It says, you know, we hit it. It's not a VPOC anymore. but does it still have value? Is there any consideration that there still could be liquidity up here, or what I like to call it unfinished business? Yeah, I think it's absolutely possible that there's still some unfinished business up there. It's where the greatest amount of trading took place on Friday. At the bare minimum, there could be people who got in Friday who are no longer interested in still being in it when they find that price got back to their entry point. Think about it from your own point of view. You get into a trade on Friday, and on Monday, price is right back where you started. What are you going to do about it? You might do something with it. So on Friday morning, we drew the box highlighting where the weekly expected move might possibly show up, because this indicator is not locked on Friday, but it does show us the new week. That's the range we had. This is where we built that range with, right? We just copied last week's range and we set it on the new week. Well, Friday at the close, the range is locked in place. So we can compare last week's range to this week's range. Now, this range width is based on two metrics. One is time and one is volatility. The current week that we have, the one that I'm highlighting here, that's a 5-day week. Surprise, right? Last week is a 4-day week. So last week's 4-day week had a much wider weekly expected move than this week's expected move. It's not because of time, right? We had less time to move. We only had 4 days. We have 5 this week. So why is the range smaller? Well, that'd be because of volatility. If it's not time, then it's volatility. This implies that the implied volatility within the option structure within the S&P is down, that there's a lack of volatility. At first glance, that may sound great. You know, hey, awesome. They're not seeing any threat out there. Yeah, but you got to kind of look at it from the other point of view. And the other point of view is we will go sideways into big events. FOMC, for an example, is volatility suppressing. I know if you haven't heard me say that before, the first time I heard someone say that, I thought you're broken, because volatility causes, FOMC causes volatility like crazy when we get the report. But while we're waiting on FOMC, right, that Monday and Tuesday, we go sideways a lot. We sit around and we chop waiting for that data to come out. That suppresses volatility. So this narrow range this week implies that the market is heavily focused on an economic event and is going to go sideways into it, or is projected to go sideways into it. We never know for sure, right? So base case argument, looking at this, the market's really focused on non-farm payrolls on Friday, and that as we get closer to that event, the range that we make on a day-to-day basis is going to tighten up, and we're going to take 2 or 3 days sideways waiting on that data before we get a move. That's going to be good for iron condors, butterflies, maybe some at-the-money credit spreads, 0-day plays that don't look for a run, right? We're not looking for breakout expansion days at this point. But the concern is that we've been sideways, right? We're IX10 at this point. So we're kind of due a move anyways, just because we're IX10. And it's a narrower IX10 than what we had back here. I just stretched it out so I wouldn't snag a candle with the magnet. So we were IX10 back here until we finally broke and had that fantastic drop, right? And we had a real minor one here. And now we're in a really tight range. And we're starting to expand. But that Friday's expansion It's not going to count if we close back inside this range again. So we got to see how the day ends. Just like back here, right? You can close outside of it, come right back in again until you finally get that real expansion. So we're in a tight range. That's the long and the short of it. We got to get out of it. The longer we're in it, the bigger the move could be when we finally come out of it. And we're waiting on non-farm payrolls. So even if we do break out, it's very likely a fake breakout and we come right back in again. We're still 2.2% above the 10-week. That's a really good place to be, like on the interstate with the cruise control on. Everything's fine. We're not moving too fast. We haven't gone too far. It doesn't owe us any sort of pullback or mean reversion, least squared methods, dot plot, statistics, nothing. Nothing. We're exactly where we want to be. Looking at the daily, 0.7, that's a really good place to be too. 1.5 would be overbought. We're at half of that. So we're not overbought. We haven't had any issues. As we were just talking about, we're sideways. And that's giving the 10 time to catch up to us, right? We got two types of corrections, a correction in time or a correction in price. Well, we didn't pull back suddenly and swiftly, and that is a correction in price. We didn't get that. So we're getting a correction in time. Looking at things that are moving out there, we got Bitcoin down 6% this morning. Over a 5-day period, that puts us down 2%. Nat gas is down 5.25%. And yet it's still up on a 5-day period, more than 0.75%. Gold miners, some high yield bonds, junk, TLT, all down, shy. Our cutoff or our benchmark is 0.5%. So just kind of want to ignore all of those and look at anything that's down at least 0.5%. Now that's my benchmark because I do the morning briefing so early in the morning. The goal of doing this briefing is to teach you how to do it so you could do it for yourself, right? Maybe I don't cover the market that you want to look at, right? Learn the steps of what we cover and then modify it to your own style and approach. If you start building your own morning briefing, you're going to want to do it closer to the open. And if you do it closer to the open, you want a higher benchmark, maybe 1% or 1.5%. I'm just using a half because it's so early in the morning and we're still a long ways away from the open. The VIX is up more than 3.5%. KWeb, China ADR group, so BABA, Baidu, JD, PDD, XPEV, NEO, all those guys, and probably solar too. It wouldn't surprise if we see solar up this morning. If you don't have solar up with China, then I would be careful looking at those names. It seems like a missing piece of the puzzle. They're up 0.75% this morning, up over 3% in the last 5 days. So it's just a continuing push. Got to expect a pullback in that group at some point. And just to beat anybody to the punch, no, we're still not ready to go long China yet as a group. Getting closer, certainly, but we're still looking for more clues. We want massive money, global money kind of flowing in that direction. Consumer discretionary also up this morning. You know, if we're looking for one of those rip your face off rally days, we would be looking for the Mag 7 group, financials, consumer discretionary, technology, communications. And sure, consumer discretionary is up, but not by very much. Semiconductors, you know, the triple leveraged one is up a little bit, but I don't see SMH up more than 0.5%. We've got the Mag 7 combo barely up at all. So sure, it's leaning in the right direction, but we don't have any of those flows yet. And it's very likely that we're going to continue to see this discrepancy with all those forgotten names, the left for dead names coming back again. And it still seems to be a fight between software and semiconductors, right? Kind of think of those two groups. When one is doing good, the other isn't, and vice versa. Yeah, look at the K-Web falling out. I did mention if we didn't have solar that I wouldn't trust that move too much. Pot stocks, we got pot stocks up this morning, but really not getting a whole lot of flows yet. It's more of just an algo print than anything else. Uranium. This says junk is up. It was down on Thinkorswim, but it's just an algo print, really, right? It's just a marker. It's no real flows at all yet. So looking at things that are up at least 0.5%, what we were just doing there with the sectors, that's good for, you know, like a helicopter point of view. But if you really want to get into it, you got to look at the actual names that are up in the pre-market. Same thing, use the benchmark of 0.5%. So we got the S&P 100. How many names are up at least 0.5%? We got 7. So 7 out of 100, that's 7%. 7% of the S&P 100 is up 0.5%. That's not very bullish. But we can flip it over and say, well, how many are down 0.5%? None. Okay. So NASDAQ 100. 8% of the NASDAQ 100 is up 0.5%. 6% of the NASDAQ is down 0.5%. That's really not bullish. It's not bearish. It's nothing. We got nothing. And that's what needs to change today. So keep your eye on the news. We could always get surprised, especially with the events coming out of France. Use something like Finance Juice just to stay on top of that, plus our own economic events. Keep your eye on the clock. We got some Fed speakers out there chipping their teeth. It's not likely that they're going to say anything that'll move the market, but they can always be misinterpreted. They could inadvertently say something they didn't mean to say, taken out of context. You never know, right? And we've seen reporters deliberately play gotcha moments with the Fed just to trap them into something and pop a headline, catch eyeballs, and move the market. So, you know, never discount those kind of shenanigans. Other than that, guys, the expectation base case scenario, we're waiting on non-farm payrolls this week. And until proven otherwise, we're expecting to hold the range. Now, remember, you want your thesis, your game plan, and then you want your alternate thesis. Because if you think the market's going to go up and you're wrong, fine, take the other side, go short, right? It's not an issue of, you know, pride or scorekeeping of being right or wrong. It's make some money. So if you thought it was going to go sideways and we break out, fine, we broke out. Play it, trade it, just change the thesis. So have 2 plans, your thesis, your plan, and then your alternate plan. If one doesn't work, the other one will. So I got for you guys, be careful, be safe. I'll see y'all tomorrow.